Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Monday, February 24th. So I'm just going to go over the usual tickers, and I might briefly go over Unity Software as well as Celsius Holdings and possibly American Airlines. But I do have to get headed to work, so this is probably going to be a pretty quick, short video. But anyways, looking here at the UVIX, this is the 2x long VIX futures ETF, closed on Friday at a price of $30.11, being up 13.75%. So we can see that nice big green candle there. And so that's exactly why it's nice to hold the UVIX when, the markets start to pull back. This does go higher. However, if we look over at the pre-market, we can see that the UVIX is pulling back about 5.5%, currently trading around $28.43. So if we flip over to the 10-minute time frame, we can see that, it was dipping below this level at 27.42, came down on Thursday to about, just below $26 a share here. It looks like at 25.85. And, it has gone up to a market hours high on Friday of $30.52 before pulling back at close right around that orange line there, but it did fade lower in the after hours on Friday, and it does look like we have seen a gap down into the pre-market, and so we'll see where this opens up at and what the price action is going to be for the day. But yeah, it does look like this little white doodle that I have here has effectively kind of played out, although we didn't dip down to 25 mark there by that purple line. But just like over here in this green shaded area, we did see, a couple spikes in there. This spike, might be followed in maybe a week or so by another one. And I do want to note that we have that 50-day moving average up there at $31.54. So that might be acting as some resistance, and it's quite possible we could blow past it, but then pull back below it, just like we did over here. But note that the initial move up to that moving average during the green box over here did get rejected initially before going higher. So maybe this is what we're seeing here, getting a little bit of a rejection. Maybe we'll pull back to that 21-day moving average, which looks like it's at 28.50. But yeah, I just think that this is a nice way to hedge. And with this big green candle move, we do see a good amount of volume behind it. We do see that the MACD flipped to green. So we'll have to see, does this continue, or do we see a little bit of a pullback? 28.43, where we're at in the pre-market, is right around that 21-day moving average. So hopefully that does hold as support, but if not, more dip buying opportunities in the future. And then just flipping over to the VIX, this is the Market Volatility Index, closed on Friday at a price of 18.21, being up 16.25%, 16.28%, which is, pretty similar to what we see in the UVIX over here, up 13.75, the VIX up 16.28. And do want to note that we do have, this uptrending level that I've talked about many times. That does seems like it was support over here before we broke lower. Didn't really respect it as resistance over here, kind of blew past it, but then came back below it. And so I'm wondering if we could be getting up to there. That would be getting to around $20 a share or so, but maybe we do see a little bit of a cool off before we do make a test at 20. Flipping over to the 10-minute time frame, we can see that nice little wedge that we did break out of, pull back to retest, retrace to the scene of the crime before launching to 1903 was the high during market hours on Friday. And of course, during market hours, because the VIX only trades during market hours, and I think it's only options that you can have access to this, which is why I like to look over at the UVIX. But yeah, we'll have to see, does this go up to 20 or does it pull back to around $15? We will have to see. Next on the list is going to be the SPY, which is the S&P 500 tracking ETF. And so, I had talked about this possibly closing on Friday at new all-time highs to then rug traders on Monday, people who were buying, or maybe I should say rug investors, who are buying on Friday over the weekend would then get rugged, but it does seem like kind of the opposite of that has happened. We did pull back, coming down 1.71%, and if I was reading this correctly, this is the largest pullback that we have seen, the worst day in the S&P 500 for the year of 2025 thus far. And so that kind of made headlines over the weekend. And so what I could see, maybe this 50-day moving average right around $599. It looks like it's at $598.82. Maybe that acts as support. We get a fake out break below all of these levels that I have marked here that I've gone over in the prior pre-market preps. Do see this orange downtrend that was notable resistance over here. We have only seen one close below those levels. So what I would like to see is a bounce today and a close above, right around 603. That would give me a lot of confidence. And actually, if we do look at the pre-market price, I should note that on Friday we did close at $599.94, but the pre-market trading price is up about 0.5%, currently trading around 603, so right around here. So if I flip over to that 10-minute time frame, it does look like we have bounced some, gapping up into the pre-market. And so, yeah, I am wondering if we will be getting above that level. Once the market opens, that level would be right around 603, maybe 604. And it does look like we hit a high during pre-market hours of 603.77. So we will have to see if that does go higher. But yeah, effectively, this white doodle that I've drawn here, this arrow, we effectively just took the express lane down to these levels. And so now I would look for a bounce up to, higher than 613.23, which was the all-time high hit on February 19th, which was Wednesday of last week. And so we will have to see. But this bounce, it might take a week or so before we get up there. So don't expect a full bounce, on Monday, Tuesday. It might take a few days, if not a week or two. But I don't think that we are going to be going down to 593 just yet. I think that we could be getting another high before. And the reason for that is just like you want to fake out, you want to shake out as many traders as possible, as many investors, people with weak hands. And, so fool them, trick them that this is going lower and then push it higher, and then they get long and then do the same thing again. But one thing I should note is that with this 1.71% pullback, we do see a pretty big increase in that volume. So that is not necessarily a great sign. We also see the MACD flipping red, but over here we saw it flip red and then it flipped right back to green. Let's flip over to the SPX. This is the S&P 500, closed on Friday at a price of $6,013.13, being down 1.71%. Pretty odd that they're exactly down the exact same percentage. But with this one, it did also pull back to that 50-day moving average, which looks like it's at $6,009.90. Did wick below that level, hitting a low of $6,008.56. And so, I'm very curious to see if we do see a bounce from that level to reclaim these, which should be effectively the same as I have on the SPY. I'm just going to adjust some of the colors so they do match. So, and the reason why I changed those colors is just so it's not all white, kind of tough to look at. With all of these different lines. But yeah, with the SPX, I'm not really going to dive into it too much, but just looking at the 10-minute time frame, let's see, on the 20th, it looks like we've got this move down, consolidation, and then on the 21st, looks like we've really just kind of faded, bear flag, faded lower. This could be another bear flag before we fade lower. So good to be cautious of that. And then looking at Bitcoin, I haven't really been paying too close attention to this, but it is kind of still at a discount zone pricing, not above 100,000, which I do have marked here. Currently trading around $95.5 thousand a Bitcoin, and it does still look like it is respecting this downtrend, which was acting as resistance over here prior to breaking out, getting a retest on the 21st when we hit a low of about 94,760, somewhere around there. So we are still above that downtrend. I am wondering if we do pull back to right around this level, around 94,000. That could be acting as support with the confluence of this downtrend as well as this red uptrend, those two levels converging. And then also, of course, with that 786 there at 93,000, about 500. And then we have below that, if in case we do break below this uptrend, which could be a fake out break. So, we want to see multiple closes below that uptrend to really suggest that we are breaking lower, but perhaps we do see a wick down to this purple line here around 92,600, or, that might be just allowing fills at 93,000, which was acting as support, has acted as support with really only this one close below it on December 30th, but the closes here in Webull are a little bit wonky, so do take that with a grain of salt. Whatever the closes and opens are over here. But yeah, I think that we will likely be holding 94,000. But if we do break below it, look for maybe a test of 93,000. And then these prior lows, like the one from February 2nd, which was 91,300 or so. And then the low from January 13th, which was around 89,200. And then now switching over to uranium, this is ticker symbol URA, the Global X Uranium ETF, closed on Friday at a price of 26.06, being down about 4.37% on the day, but looks like we're getting a little bit of a bounce, about 1% in the pre-market. But yeah, look at that. I had doodled this over here. We're coming into not only that 618, where did I draw that from? So you can see that retracement highlighted over there. That's at 2635. On Friday, we hit a low of 2590. But yeah, this doodle that's in white here, the initial doodle that I drew was this purple one, suggesting that we could be coming down to right around $25 a share. And that would be corresponding with this Fibonacci extension that I have drawn up here. So from the high to the low and then back up to the high, suggesting, that this basically the same move from the top here to the bottom here, taken from here, would be bringing price to right around $25 a share. That's marked at 25.03. And then we do have this uptrend that I've drawn here. I believe I do have it locked in place. And so that is based on, it looks like the low from August 5th and the close from September 6th. And so that's really what I am looking for, a test of that level right around 25. And, if we do break below 25, we do have the 786 here around 2450. And so that is when I would be looking to consider adding into either URA or a different uranium or nuclear ETF. I think it'd be great for the country. And I just think that we need to be adding it. Putting more investment into uranium and nuclear. And what we see here with this big red candle is we do see a big spike in volume, but it's not as big of a spike as we saw over here. So that is perhaps a little bit encouraging, but we are below, all of the moving averages now. So I still think that this is going to be coming down to 25. I'm going to stick with that. And if I do flip over to the 10-minute time frame, it does look like we're kind of dancing right around that 2635 level, that 618. So we will have to see where this takes us in the coming days. But yeah, with that being said, I don't really have much time to go over these other tickers. But with Unity Software, I pretty much nailed this with the high on Friday being $30.88, approximately corresponding with this white downtrend that I have drawn here, going back in time to the highs from August of 2022 that served as resistance over here. And so what I could see happening is, I suggested not only with Unity but also with Celsius that we could be seeing a gamma squeeze. But what we're seeing in the pre-market is, a little bit of a pullback, about 0.4%. And so what I could see is like consolidation over here that would eat away at theta. And so that would make, the premium on options decrease. But with that consolidation, that could be a bull flag before we continue higher, like up to this purple line here at 43.65. And so I could definitely see that happening. And then that would effectively be forming the head for this inverse head and shoulders pattern. And so I think that just looks really good. But as far as options go in the near term, let's see, looking over, the course of March, we could be seeing just some kind of boring consolidation there. So good to be keeping that in mind, but we could still see some pumps higher. But I do think that what looks best for the stock to really be continuing up to around 43.65 is a consolidation, forming a bull flag. And then from that, we could take a Fibonacci extension there. And I think that would suggest price getting up to right around $40 to $45 a share. Celsius, let's look at this one. This was red on the day in the sense that it opened higher and closed lower, but it did gap up, and so that's why we see it green over here, 77 percentage points higher, and closing at 32.62. So just like Unity, I could see this perhaps consolidating around here before continuing higher, but that might be eating away at theta. While stock price, I think that there could be some nice dip buys over here. Whether it dips down like I have illustrated here, with a rally first, or maybe it just goes lower, or maybe just like the low that we saw on Friday, which was $30.12. Maybe that just acts as a dip buying opportunity. And one thing I did want to point out about American Airlines, I did see a comment on this. It did close at 15.23, down about 4%. So it doesn't look so good over here, but one thing that stood out to me was some options data. And so let's look over here. I was looking up at this put because it did seem like, it'd probably continue lower. But actually, if we do look at the premium data over here, I'm not going to get into it just because I got to get headed to work. But what we do see here is the bearish bullish slider is more on the bullish side with 57% bullish there. And that would correspond with the selling of these puts with net put premium coming down here by 3.42 million on Friday, whereas net call premium came down by only 121,000. So while that doesn't necessarily suggest that it's going to be ripping faces off in the near term, it does suggest that bears are offloading contracts, selling puts, which does suggest that the bottom might be in. But between now and the next leg up, if it does have another leg up, it could be flat. And so that's why, these bears are selling their puts, and why also, net call premium also coming down. It could, be flat, just like, big down move, flat over the course of the week before next down move. So something to consider, but just from that options data from Friday, it is not necessarily bearish. It's actually bullish, but that could result in, just kind of like what we had over here, a move of about 5% to the upside, getting a little bit of that bounce right here before coming back down. And so maybe we see something like that again before heading closer to filling that gap down there. So something to be keeping in mind there. But like I said, I got to get headed to work. And as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys.